And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
I just got the point. Mr. Clanton just gave me the point. This is a signal. It's that time for The Real Investment Show. Hello, everybody out there in RIA land. It's the Financial Fitness Friday edition. I'm Jonathan Penn, certified financial planner. Friends, family, clients, all call me John. Like I say, my wife always calls me Jonathan when I'm in trouble. So if I hear that, you'll hear me coming running. So really appreciate you guys spending some time with us here in the studio this morning. Got a lot to get into. Kind of a big day today for RIA advisors. For the last 18 years, we've been broadcasting on KSEV 700 AM. And I will say today is the last day that we are going to broadcast on 700 AM KSEV. It's been a wonderful ride. It's been a long ride. And I have the honor of being the last broadcast on 700 AM KSEV. So where are we going? We're going to go all digital. So you're going to hear us. We're still going to be on our YouTube channel. We're going to be on X, Facebook, Spotify, iTunes. Am I missing anything, Brent?
Well, if you did, it's okay. We got it covered.
We got it covered?
Yeah.
And my daughters will even be surprised to know that I even know what all that stuff is.
Yeah, we sort of had a learning curve.
Yeah. So hey, we'll be all digital, all of our podcasts. It's all going to be, go to Real Investment Show, look up our YouTube channel. It'll be all there for you. We're still going to be having great content, great speakers. It just says that we're not going to be on KSEV anymore. So it's an honor to be here to kind of wrap that up with KSEV.
But we still will be live every morning at 6.
So it's still going to be 6 a.m.?
Every morning at 6.
So we can't sleep in?
Well, you can if you want.
I can if I want to.
But you'll miss the show.
I'll miss it.
Yeah.
Yeah, it is good. We do like to kind of get in here early so we can get all this information out before the market opens. Then we can all kind of get on with our day, right? So so it's all still going to be live.
Yes.
Okay. I was hoping I could sleep in a little bit.
That's the beauty of it, though. If you miss it, you can go back and catch it on the replay.
Well, that's true.
And that's the whole point.
Yeah. Listen to us when you're, on the elliptical. If you're on the world's most expensive coat hanger.
Under the elliptical,
on your bike. I'm just going to mention the Peloton. So I'm ashamed to admit we have one of the world's most expensive coat hangers in our house too. Who doesn't? It's actually in the garage, and I use it quite often. So just saying. No, I appreciate that, Brent. So again, a lot to get into today. First and foremost, if you're looking at the news that came out last night, President Trump unleashing, as the headlines say, sweeping new tariffs and a blow to global trade. So they're already hitting you with all the fancy words here to try to kind of get you roiled up a little bit. And just looking at how the markets are, reacting, this morning. So you're seeing some red on your screen. So the Dow's down just a little over 1%. So the Dow's down 499 points right now, and I can already see it. So, okay, everybody out there in RIA land, don't let the media get to you today, right? Don't let these narratives sway you as an investor, because I can already see it. I can already see it coming where the media is going to be like, markets are down 485 points. Oh my gosh. Well, the Dow is at 43,832. So it's about a 1% move, give or take, right? So you started off with $1. Now you've got 99 cents. Has your day really changed that much? Probably not, right? So again, then they're going to be hitting you with the narratives today. And let's just see. I wanted to take a look and just see how the 10-year interest rate is on the Treasury this morning. It's hovering around about a 4.9. It was at a 4.4 earlier. It's about a 4.39 right now. So again, don't let these narratives hit you. So basically, President Trump, making an announcement about some additional reciprocal tariffs ranging from 10 up to 41%. Syria is the one that Syria, the country, they're in the 41% bucket there. This is all going to start or take effect on August the 7th, so just next week. And I found this interesting. There's a comment that he made where trans-shipped goods that are being kind of scooted around from country A to B and then C, then even trans-shipped goods will be subject to tariffs of 40%, right? So all these headlines are coming out, this morning here, but don't let the headlines scare you, because the media is going to be all over us to kind of try to roil the markets here. So don't let the narratives sway you today. So as of late too, some earnings announcements, right? So what are the companies that are making some earnings announcements today? ExxonMobil, Chevron, Texaco, right? So we'll have to see how does big oil, what do those earnings announcements look like today? Earlier this week, some of the notables, Apple, Microsoft, Amazon. Microsoft, now part of the 4 trillion market cap club with NVIDIA, right? Next week, we have Palantir. I think a lot of folks will be looking at Palantir. What are their earnings announcements? Then, of course, the big one, a little bit later in August, I think it's August the 27th, is NVIDIA, right? So I think markets, investors are paying very close attention to earnings. And it's not so much about what the earnings announcements were for last quarter. It's more around what's the forward guidance? What is the story for moving forward? What's the narrative? The markets are always looking for a narrative, right? But then, too, this week, we had the Fed, and we weren't surprised, left rates unchanged. Next Fed meeting, September 16th, 17th, much bigger probability that there'll be a rate cut in store then, right? So we'll have to see. So markets are always kind of looking for a narrative, looking for what's next. So there'll be a lot of things that we can keep our eyes on as investors. So speaking of things that we can kind of keep our eyes on, joining me.
Don't keep your eyes on me.
Oh yeah. So what was that voice? The baritone. There can only be one voice with that baritone.
James Earl Jones?
Is that James Earl Jones?
May the force be with you.
Did Darth Vader just walk in here? Is that Darth Vader right here? It can only be.
This is CNN.
The one and only, and the man, the gentleman, who puts the real in Real Investment Advisors, Matt Doyle.
Yes.
How you doing, Matt? Matt is here.
Barely.
The coffee is flowing.
Barely.
So Matt and I have
How
a lot
you
to get
doing?
into. I'm good. We have a lot to get into today. Because as investors, there are different ways that we can look at risk. Right? So we're going to talk a little bit about risk, not just portfolio risk, but a much larger area of risk management that we need to focus on as investors. So join Matt and I. We'll be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire?
Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. Realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, welcome back, everybody, to the Real Investment Show, Financial Fitness Friday edition. Like I said in the first segment, hey, Matt, Brent, and I are here to kind of wrap up the last day of streaming on 700 AM KSEV, but you're going to find us on all of our other outlets, all of our other media channels, YouTube, X, Spotify, iTunes, our podcasts, all live, still at 6 a.m. in the morning, right?
Well, I
It's
mean,
all good.
as people would know, the KSEV broadcast.
Are they sleeping in?
Now, Matthew,
Isn't that what it sounds like?
be nice.
Okay, bless you.
Brent's going to keep us all in check this morning to make sure we're all on our good behavior. No, it's good.
Well, the key is if you will subscribe to the YouTube channel
Yes.
and click the little notification icon, then when we hit the ether, you will be notified.
Very good. Very good. I
Very
appreciate
cool
that.
how that works.
So, talking a little in the first segment was talking a little bit around kind of the real-time news this morning about President Trump and the kind of the new tariff announcements. We'll have to see how the markets react to this. You know, markets are down a little bit here, about 1% or so pre-market. Again, watch out. Media's going to be all over it. Dow's down 500 points. Well, it's about 1-ish%. And, you know, for the last several discussions here on the program, Lance and Michael both have been, you know, pretty adamant or have been telling us, hey, don't be surprised if the market has a little bit of a breather here. We kind of need it because arguably markets are a little bit frothy. So, hey, some healthy pullbacks, you know, they're kind of wanted, right? So, you know, we're also really not surprised by this either. So, you know, kudos to Lance and Mike for, you know, being proactive with letting everybody know that, hey, a market pullback here would be somewhat expected. So don't let this roll you. Don't let this get you nervous today. All right. So last week, you spoke a little bit about some investor behavior framing, and spoke about just how we kind of, rather than looking at the sum of the whole the total of the parts of the portfolio, we kind of tend to nitpick a little bit. So talked about framing last week, relative performance bias, but there's another investor behavior that I've been noticing too as of late, Matt, and that's what I like to call herd mentality, or following the herd, right? And it's simply as what it sounds. It's like, rather than, as an investor, rather than doing your own homework and your own analysis on what you want to own and put into your portfolio, you're just out there kind of following the crowd. Like, what's hot? What are the hot stocks? Are they meme stocks? Is it various cryptocurrencies, or whatever it might be? Is it AI, right? Is whatever that narrative is out there, but you're out there just kind of chasing and following along with a crowd without doing your own research. And truly, and Lance mentions this all the time, you need, as an investor, we all need to understand what we own, right? Why do you own what you own? Why do you have your portfolio positioned the way that you do? And to this day, I'm very fortunate. Matt and I, we visit with individuals and families all over the country. And especially a lot of times I find when we are engaging with, or maybe starting new relationships, and we're looking at the portfolio that client or family may already have in place, it is not uncommon for me to receive a comment where I hear, John, I don't even know why I own this stuff. I don't even know why I have it. And so we really want to drill down and really get a good understanding of what you own and what is the risk that you're taking as an investor, and does it match what I like to say, your risk persona, right? So with that herd mentality, it's just very easy for us to say, well, like gold this year, for a great example, gold has been doing very well this year as of late. And so I've seen this tendency of folks wanting to just kind of, it's like a bug light, right? We're all kind of mesmerized and we're flying to it. And if you get too close, you could get zapped. And the way you get zapped is by maybe over allocating too much of your portfolio to any one investment or asset class where there's been really strong performance, that we just kind of keep putting money there time and time and time and time again. It's that following the herd. It's that herd mentality. And saw a lot of this when back in the late 90s, early 2000s, when it was the dot-com mania, right? It didn't matter. It didn't matter what the investment was. If it had .com behind it, that's where money was flowing, right? And at that time, I was at Schwab at the time here in Houston, and I remember a number of conversations where clients would sit down and we were talking about, what is their risk tolerance? What's the right, investment strategy to take for them or use for them? Hey, let's look at their longer term goals and, return expectations. It was not uncommon for a client to say, well, John, I expect 20 to 30% returns every year. That was the expectation. That was the euphoria of it, right? And so I think this can all kind of go into that herd mentality where as investors, it can really lead to some additional risk taking where it's not necessary, and it leads us to have these thoughts around return expectations that are those like 20 to 30% per year. Is that really realistic? You look at historical market returns going back over the last 120 years. I think the average return of the market over that span of time, talking about the Standard & Poor's 500 index, is 8% ish, right? So again, are 20 to 30% per year returns normal? I would say no, right? And what I see sometimes is as these higher rate of return expectations, are they kind of nibble at us a little bit, where maybe clients that I were, individuals and families that I was visiting with, maybe a couple months ago, a year ago, hey, John, I'm pretty conservative. I really don't want to take a lot of risk. Then all of a sudden, in some recent conversations, it's, hey, I think I'm going to let my son or daughter, manage a portion of these assets, and then we kind of peel that back a little bit more, and it's like, well, what will those dollars be invested in? Oh, well, we'll talk a little bit about cryptocurrency and some, gold miners and precious metal miners. And it's like, okay. And look, there's nothing wrong with having a portion of your portfolio in assets or investments that are maybe a little bit more speculative. So that way, if those particular investment classes do well, guess what? You benefit. But what I see sometimes is just this shift where it's like, we're going to put in, 30, 40, they maybe put 50% because these just keep going up. They have to keep going up, right, Matt? I mean, these asset classes won't pull down. So they put a too much of their portfolio in these asset classes. And what you don't want to do is be on the wrong side of the trade if it doesn't work out as intended, right? So I'm seeing some of that with this herd mentality where we're just kind of following along with the herd and we're not really staying true. Yeah, you're chasing returns. Yeah. And you're not staying true to yourself as what type of investor are you? What is your true risk persona, right? And I know, Matt, you visit with clients daily. So, what are there some common concerns or themes that you're kind of hearing lately?
Well, I mean, I think folks, when it comes down to the planning side, I think folks are fundamentally identifying with what can I do, right?
Yeah.
How much can I spend? The spend question, and I think as we talk to clients, the spend question is probably the most paramount issue. Mm-hmm. I mean, we can deal with taxes and we can deal with some of the other concerns that are out there, but those are, I don't want to say in the margins, but they're in the margins, right? What is my spendable pay? Transitioning from I'm working,
yeah,
and I have this bi-weekly check hit my bank account to I'm not doing that anymore. That's a big jump. It is. And so when it comes down to how much can I spend, I think that's the biggest question that clients have. And so when we're doing financial planning and when we're building out a financial plan for a client, I would prefer to err on the side of caution. Mm-hmm. I don't want to have a client expecting that 9, 12, 20% return.
Yeah.
Right? So our forward-looking projections, when we do these forecastings, our forward projecting our forward estimates in terms of returns and all of that, I think are quite conservative.
Yeah.
So I would prefer to build a plan, right, based on those conservative numbers. NVIDIA, to your point, NVIDIA's done great this year.
Yeah.
But we're not going to buy 100% of your account in NVIDIA. I mean, that wouldn't be prudent either.
And it wouldn't be prudent. And as fiduciaries, we have to look at this from what is the best for the client, right?
Correct.
So Matt always has a way of so I think as investors, we all kind of get focused on, should I buy NVIDIA? Should I buy Microsoft? Should I buy the Palantir? And we kind of get sucked down into the weeds a little bit. And Matt has a way of just kind of letting us focus on the forest in the big picture. So we're gonna visit with Matt a little bit more about that when we come back.
Oh boy.
See you in a minute.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. Realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
If Lance dressed up like Danny, maybe his wife would listen to him. No, that is not the case in my household. I actually had this conversation.
She wouldn't listen to him anyway.
The Real Investment Show podcast.
I had this conversation with my wife yesterday. I told her no on something she wanted to do. And she goes, I'm sorry, I think I misunderstood what you said.
Same show, your schedule.
You meant, yes, you can do that, right? And I was like, yes, honey, that's what I meant. So, yeah, she goes, I'm going to do what I want to do. I'm like, okay.
All right, love you. See you.
Exactly.
At realinvestmentadvice.com.
I could wear a tuxedo, and she is not going to listen to what I have to say.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, we're back.
I'm taking this off the rails right now.
You are?
Yeah.
What's on your mind, Matt?
We were just talking right now behind the curtain.
Are you going to let folks know what really happens here in between the breaks? Okay.
I mean, it's the real show.
Let it rip.
We were just juxtaposing. We were just juxtaposing Desi Arnaz and Lance Roberts as sort of friendly idioms. Is that a way to say it?
Does that make Mrs. Roberts Lucille Ball?
I mean, I've only been fortunate enough to have encountered her once, I think.
What, a glimpse in the elevator?
Mm-hmm.
Yeah.
Yeah. We walked past each other in the hallway and winked at each other, and that's about all I know about her.
Like office workers passing in the night.
That's it.
Yeah.
So fun chat on the last break, giving you a peek into Mr. Doyle's brain.
Well, the chat window is alive and well.
The
this
chat
morning.
is
It's a terrifying view.
No, it's not. It's not terrifying. And the chat has been very live this morning. JP said that John Penn's wearing a pale shirt. Does that mean it's time to sell? This is a relatively pale shirt. It's like a pale purple.
Pale purple?
Pale purple. And I'm just being honest, when I walked into the closet keeping all the lights off this morning so I didn't wake up my wife and all of our fur babies, this is just what I grabbed, and I was like, okay, purple will work. Right? Try not to upset the apple cart as I was leaving at the, crack of dawn this morning. Mm-hmm. Chat, we appreciate you. Thanks for sticking with us.
Hold on, Lance is in there.
I'm sure he is now.
He's accusing you of winking at his wife.
I'd take no responsibility. I just work here.
So the chat just got even spicier, right?
Juicy
this morning. So Brent, will we still have the chat?
Oh yeah,
We'll still have the chat.
Oh yes.
So we're transitioning off 700 AM KSEV, and we're going to be all digital.
We may actually have somebody monitoring the chat.
Oh,
is this Mrs. Danny, the other Ratliff twin?
We haven't told her yet.
Oh, okay.
is that news this morning?
We're just getting
if they're
all
listening.
of the powerhouse involved.
Yeah, this is what happens.
So we're going to have a monitor so the chat has to be
moderated.
Yes. And
It has to be?
It should be.
Yes. Okay.
Uh-oh. Well, the chat's been fun this morning. It will continue to be fun.
Yes.
Bless you.
So
You have to be really egregious to get kicked out of chat.
that is true.
That sounds like a challenge. I think some of our friends in the chat might.
Take us up on it.
Hey, they might.
Yeah.
They might be like, hey, how you doing?
Yeah, well, somebody just said that's why you don't take Fridays off, Lance. So they're chiming in on what is going on between Matt and Lance right now.
Hey, he's in there. Yeah.
Yep. So before the last break, when we kind of started diving in all into these, what did we say, idioms? So Matt, we were talking a little bit about helping individuals, families transition from that phase of being an accumulator where you're saving and you have that regular stream of income, whether that's from your employer or if you are a self-employed individual, you own your own business.
Or if you just ask.
What's that?
If you just ask Mrs. John Penn, can I have my paycheck, honey?
Well, so there's another look behind the curtain, folks. Like I said, there is a reason that I said Matt is the reason for the real investment advisors. It's all good. But yes, so it is definitely a joint decision at home. Mm-hmm. And I'm very aware of who really wears the pants in the family, right?
You do, but
Sure, I do.
But under the apron.
Sure I do, Matt. Of course, I'm the one who makes all the decisions for the house. Oh, it's a joint decision. And we see that a lot with spouses, with married couples, where you were talking about plans earlier, Matt, especially when we're working with spouses. It's great when both spouses are part of the planning process, right? And
engaged.
Both are engaged.
Yeah.
And it's not uncommon when one spouse maybe wants to get down into the weeds a little bit more than the other, but at least both are there. They both have, both spouses know what's going on. They're both engaged, and heaven forbid, if something should happen to the spouse that kind of takes the lead and kind of gets into the weeds on this, the surviving spouse knows where everything is at, and if they need assistance, who to call.
Correct.
Right?
Correct. This is a big issue.
Yeah. It is a big issue. So when we were talking about that accumulation phase, you're saving, you're putting money away, you've got that regular stream of income coming in. when I go to my wife and I ask her for my paycheck, as Matt alluded to. Right? So then now all of a sudden you're getting nearer to that next chapter of your life. You know, some folks call it retirement. Retirement means so much. You know, it's such a very broad term. You know, I find it rare that folks just flat up retire and just, that's it. They don't do anything. Usually they just want to have more flexibility. They want to have choice. You know, they still want to work and be, you know, an active, they want to be a contributor to community. They want to have purpose. They want to have value, and they want to do something that they really enjoy. And if they make some money from it, that's great. They're not so much concerned about, do I need to earn what I was earning before? Maybe my income's a little bit less, but I just want to have more flexibility in my life. So that retire, it's just so vague, right? But as you're getting closer to that, what I call that next chapter of your life, and you're kind of going from that accumulation phase to more of the, as Matt was talking about earlier, that distribution phase, where now you're going to have to start relying, you know, pulling money from these dollars that you saved. You need those dollars to start creating that regular stream of income to recreate that paycheck. That can be a very emotional process. So, you know, Matt, as we're working with folks, and you're talking about that planning process, you know, what are some things that you like? What are some things that you can share with folks out there around, you know, how do we kind of approach or help folks through that process?
Well, I mean, it's all bespoke.
Yeah.
Right. So, you know, this is an ongoing question that comes up. And I think that the short answer is we work for the clients, and we'll build out whatever distribution strategy they're comfortable with.
Mm-hmm.
So from a very sort of micro standpoint, you know, some folks are, hey, you know, send me X dollars every 3 months. But it also comes into, it also is important to know what is the best, most efficient use on an account standpoint. What is the best, most efficient use for a distribution strategy? Now, a lot of folks that are retiring today have an extraordinary percentage of their assets in pre-tax 401k IRA money. And that's a function of, that's all that there was, right? That was the only savings vehicle since the 70s when it came out. So that's all that they've been using. The Roth is relatively new by comparison. And then you have also taxable money, right? You have checking account money, you have brokerage account money. So what is the best way for me to withdraw? If I have 80% of my money in pre-tax, well, I mean, you're sort of pegged to that. The issue comes into play when you hit that magic age and you're subject to required minimum distributions, and then you're forced to take money out of your IRA because the government wants taxes. So you're kind of pigeonholed. But where does the rubber meet the road in terms of, you know, can I convert these monies? You know, that's something that we look at usually between retirement, your income's down, between retirement and that magical RMD age. So order of distributions can be a crucial factor in how much am I spendable? How much is my paycheck? How much can I use during retirement?
All wonderful points. And we're going to continue this because this is an area that Matt and I and all of us here, all of the advisors, that we spend a lot of time with clients looking at tax efficient withdrawal strategies, Social Security, Medicare, So come back and join us here in just a few minutes. We'll see you soon.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, welcome back. The last segment of the show this morning, and the last segment that we're going to be on 700 AM KSEV. Is that static I hear in the background? Is that snoring? I'm not sure.
Stop it.
Look, it's been a great ride. And KSEV, thank you. I think we've been on KSEV for 18 years, right? I just looked at the screen. I'm looking at what all of our viewers out in RIA land are witnessing right now.
Hey, baby.
And
I'm Ringo.
I think somehow
Ringo Starr's coming.
I think I'm in an alternate reality of some sort. Is that Elton John in here with me right now?
It's Elton Doyle.
It's Elton Doyle. So, is this a celebratory little send-off?
Jantra?
Is that what this is? As we go to being all digital?
I think so.
Okay.
I think so. I mean, it's worth commemorating the day.
It's worth, okay. So this is a...
To my mind.
This is a historic moment.
Yes, I think
Sharp's
so.
Law in the chat says...
Sharp's Law in the chat.
Matt is off the rails.
Yeah. Bless you, Sharp.
So, next week, you're going to see us on YouTube, X, iTunes,
Meta,
Facebook, all of those media outlets that our daughters had no idea that Dad here actually knows what all that stuff is, right? So that's where you're going to find us.
So your hips looking scary? Is that?
That's it.
Yeah.
That's exactly right. Because they really think I'm a dinosaur. They really do, right? And I really don't think I'm that old. I'll be 51 this October, right? But my kids are like, gosh, Dad, you're a dinosaur. But I know, I'm pretty, as they would say, hip.
Yeah.
I'm kind of hip and up to date on all these various media outlets, right? So during the break, there was mention of a Social Security webinar that Rich and I are doing. It's going to be on August the 23rd. It's going to be at 8 o'clock Central. Stop by the website, realinvestmentadvice.com, and you can sign up for that. We get a lot of questions around Social Security strategies, when's the right time to take Social Security. And like Matt was mentioning earlier when we were talking about financial planning and helping people go from that accumulation phase to that distribution phase and looking at income analysis and cash flows and generating that paycheck, just like that is very bespoke. So is Social Security planning, right? And there are a lot of things that we see when it comes to Social Security planning. It's Social Security, Medicare, the alphabet soup of Medicare. It can all be very overwhelming. It can all be very confusing. So Rich and I are going to spend some time on Saturday, August the 23rd, talking about Social Security. There'll be Q&A. We'd love for you to be there with us. So go by our website, realinvestmentadvice.com. Click on the register button. We'd love to have you. And in the meantime, if there are some specific Social Security related questions that you have that you want Rich and I to discuss, send those to us, and we can make sure with the time that we have that we can try to cover all of those questions that come in. So, Matt, we were talking a little bit about that distribution cash flow, distribution strategy when we look at financial plans, looking at tax efficiency, and you mentioned Roth, right? And perhaps exploring, does it make sense to convert to Roth before somebody becomes, at least this year, 73 years young. 73, that's when you have to start taking your required minimum distributions. And there are a lot of times, Matt, when we're reaching out to folks to say, hey, it's time for you to take your required minimum distribution. That needs to be done here before the end of the year. The question I get is, well, how much is it? And I say, well, Mr. or Mrs. Client, this is what the amount of the distribution is. And sometimes it's, well, I don't need that much. Oh, okay. Well, it still has to come out, right? That RMD still has to come out, because if it doesn't, then there are penalties that can be imposed, right?
What is it, 25%?
Yes. So it used to be the penalty was if you were audited and you didn't take out that required minimum distribution, it was 50%. Now it's been reduced down to 25%, and now there's some leeway on. You've got some time. I want to say it's 2 years where you can correct that. So there's a little bit more leeway, or you can fix it. But the Roth decision to convert or not to convert, that can be a confusing process too. So what are, Matt, what are some thoughts, or when we're visiting with folks and kind of exploring, does it make sense to convert to Roth? What are some things that we kind of help guide people through?
Well, I mean, I think the biggest thing, out there is you don't know what's around the corner. I think that's for the first piece of it. That's the biggest thing. In my, short 25-year career in this business, the tax law has changed. I don't know how many times.
Yeah.
It just, politicians vote. That's what they do. They change stuff. So, what we do when we're doing these projections is, our best guess based on the future, but predicated upon, the tax law as we know it today. And one thing's for sure is that the government wants their money. So if you're going to take a pre-tax account, pre-tax money, pre-tax dollars from an IRA and convert them to a Roth, that's a taxable event. And the government's glad for you to do that. They're glad for you to pay those taxes in right now. The benefit is ongoingly that, you won't have to pay taxes on those funds going forward, which is just great. But you want to have, in my opinion, there needs to be a sort of a use of those three main buckets. You're going to get your Social Security if they're paying. You're going to get your pension if they're paying, but you don't have control. Annuity payments, you don't have control over how much that is or when it comes in or any of that sort of stuff. But you do have control of how much taxable money do I have, how much Roth money do I have, how much IRA money do I have. And moving money between all of those buckets can make a lot of sense because it gives you the flexibility in retirement. When you want that paycheck, it gives you the flexibility in retirement to control your taxes.
It does. And, and I think, so now with the change in rules around inherited IRAs for non-spouses, it used to be that for a non-spouse who inherited an IRA, they could stretch that IRA over their lifetime, and then it changed in 2020. Well, now there are times, Matt, when we're visiting with folks where maybe, maybe for mom and dad, converting to a Roth IRA for them may not make sense from a tax standpoint. But they look at make that conversion into the Roth because they're thinking about their children and they're looking at their lifetime. So that way, when son or daughter, children, they inherit a inherited Roth IRA, that money now still has to come out over 10 years, right? But all that money comes out as the son or daughter, as the children, as they are pulling money out of the inherited IRA, it all comes out tax-free, right? So I think that Roth can be so now, even though a Roth conversion for maybe mom or dad may not make sense from a number standpoint, it can still be used as a very effective estate planning tool. And so I want to bring up a great point that one of our members in the chat mentioned this morning. So, here today. So yes, if you're turning 73 this year, this is when you need to really start looking at exploring or taking your required minimum distribution. But if you were born on or after January 1st, 1960, your age in which you need to start taking your required minimum distributions is actually 75, right? So that window that Matt was talking about when somebody is, let's say you've retired, or maybe your earned income is now less than what it was before. You may, that window in which to start taking required minimum distributions has been extended, right? So that gives you more time to look at are there ways where you can, fill up some tax brackets or to take advantage of those tax brackets with Roth conversion strategies potentially even before you turn 75 years young. And sometimes maybe the Roth isn't the answer. Maybe it's rather than wait until you're 75 years young or 73 years young, depending upon when you were born, don't wait to start taking all of your required minimum distributions. Then start taking some distributions from your IRA earlier, right? Try to spread those distributions out over time. Spread out that tax burden, make it a lot more efficient for you, because that also will help control how your Social Security is taxed.
Correct.
It will also help you look at managing your premiums for Medicare, Part B, Part D. How many times, Matt, do we have conversations with folks where they're really concerned about Medicare and IRMA charges?
Yeah, I mean, IRMA definitely hits into it, but you have other factors. You have QCDs. You have other issues. If you want to, if you're going to have leave on money, right? There's other ways to potentially use those today rather than just, I'm going to kick the bucket and somebody else's problem.
Exactly. So all this to think about when it comes to the world of financial planning, income planning, retirement planning. So a lot of great points there, Matt. Thank you. Again, everybody, this is our last time on 700 AM KSEV. Look for us on all of our different media channels starting next week. We appreciate you being here. Y'all have a great day.
If you can't be good, be bad, baby.